us.
Good evening, one and all, and welcome to our 14th session on fundamental and technical analysis. Today, we'll be going over interpreting chart patterns, the continuation from last week. And as always, our sessions will be conducted and being taken on from this point onwards by Saliya. So over to you, Saliya.
Thank you, Niwan. Good evening to all of you. Nice to be with you all once again. Today, I thought I'll be continuing the chart patterns with some famous and also some patterns which a lot of people would like to draw. And the thing is, more than drawing those, identifying them, drawing them is one thing, but making use of them is the most important thing. We're going to talk about head and shoulders and the regular head and shoulders, and also we will be looking at the inverted head and shoulder pattern. Then we will be talking about rounding bottoms and also cup and handle, and how we are going to make use of them when we draw those patterns. Now, talking of head and shoulders, it's very easy when it comes to the chart tools that we have, because if you see in the tool panel over here on the left hand corner, when you click on this, you have head and shoulder pattern tool given there. But before talking, taking the or rather using that tool to draw our pattern, I'm going to just show you by using the line so that we will understand and get the idea. First, as I said, is the idea. Now, in the head and shoulder pattern, which is called the regular head and shoulders pattern, we must understand that it's a reversal pattern. In other words, head and shoulders is a formation that you will spot in a trend reversal in an uptrend. Therefore, first, the trend has to be intact, meaning the trend has to be in an uptrend. Thereafter, we will see the formation of this pattern. In the case of the first, once we identify the pattern, and if you have rather identify the trend, which is an uptrend, as I mentioned, and I've been always using the interpretation of an uptrend. I mean, we're talking of an uptrend where you need to see higher lows and higher highs. It can be within a shorter period of time or a longer period of time. Ideally, in the Sri Lankan market, you need to see a trend, if it is an uptrend, more than 3 months. And fortunately, in our case right now, the present uptrend is more than 3 months. In fact, we have started the uptrend on May 2020, and still we are respecting that uptrend. Therefore, I'm going to use the uptrend that we saw in the month of January, and I'm going to use a stock which is Aiken Spence. It was not only so many favorite stocks that were very active during the month of January. Even less famous but very strong counters like Aiken Spence PLC also had a rally, and still they are enjoying that uptrend. Once we understand the prior trend, then we will be looking up to a left shoulder, and I'm going to use the lines in order to show that in the first instance. What happens is you see an uptrend moving, going and pausing in making a resistance point like this. Thereafter, after the resistance point, you have a reversal to the downside, which is called a pullback. This is the rally. This is the pullback. Once the pause of the pullback happens, the prices find support or a support point. Thereafter, we will see a reversal. Then for the head and shoulder formation, the next rally cannot come and just stay and test the previous high. It has to break that and move up like this. Thereafter, there can be another pause. Once the pause is there is going to be another pullback. And that pullback can come down towards the previous support, which is here, and test that level. But now itself, I must tell you, it doesn't need to, it's not a guideline or a rule for the head and shoulder formation to come and find or test support at the previous low. That's not the case. It can vary, right? So at that point, let's say now in this example, I'm showing it like this. When that happens, there is a pause in this pullback, then reverses to another rally. Now, before coming there, you need to remember that when we see highs on a daily basis, or when we see highs within a period of time, it can be several days, weeks, months, for an uptrend to continue, the previous high has to be broken. Now, in this case, the previous high is not this high. Previous high is this high. As such, this reversal cannot go up and just be here for us to conclude that the trend is going to go up or trend is going to continue. That is one of the secrets in the head and shoulder formation. Once you train yourself to identify these rallies and pullbacks, and then the troughs like this, right? Especially when the stock is trending up very aggressively, you need to understand where this rally after this pullback, after the second high, this is the first high, then you have a higher high, thereafter you see a pullback. Then when the rally takes place, whether we will be watching for the price to go up and break this level. But in this case, in a head and shoulder formation, it doesn't happen like that. It goes up and rejects this high and pauses lower than this level. Then again, it pulls back. When this pullback takes place, let's stop it here. You can see these troughs, the low points. These are the lows. It can be swing lows. It can be just a sideway movement, some kind of, maybe sometimes maybe of several days. It has gone and taken support at that level, right? At the same time, I think you can remember we were talking about double bottoms, right? So these are two bottoms that we are talking about, right? So in that bottom scenario, we were talking about Adams and Eves, right? So all that will show us a swing low formation, right? That also we have discussed earlier. A swing low here, then another swing low here. By using these two swing lows, we draw a line called a neckline, which is in fact a support area that we join, which is called the neckline, like this. Now, head and shoulder pattern confirmation happens once this pullback comes to this level and break it. Right. So this is the formation of the head and shoulder pattern. Why we are saying head and shoulders is because the middle high is higher than the other two highs. That's basically has to be the case, right? Sometimes that head could be, at a higher level compared to the two sides, the shoulders. So since this is on the left side, this is on the right side, the top of the left reversal resistance is called the left shoulder. The right side is the right shoulder. So you have the two necks here. So you have the neckline. Now, the same thing that we do by using the tool, like this. Here, you go to the head and shoulders. You do the same thing. It goes up, draws the left shoulder top, comes down. Each and every time you have to click. Sorry, let's do it again. You pick up a level to start your left shoulder, click, then go up. Then you will spot the swing high, click on that. Then you come down to find the swing low, you click on that. Then you go up and find the next rally, the top of the next rally, which has to be higher than the left shoulder. Click on that. Then the head is formed. Then at the same time, you will see the neckline is also created. Then you come down, click on the next swing low. Then you go up, click on the next swing high, then come down. This is how you make use of the tool to draw the the head and shoulder pattern. At the same time, when you click, you can use this format or settings button or setting icon and change the colors the way you want. Also, here you have the coordinates, meaning the starting point, then this top, then this bottom, then this high, then this bottom, then this high, and this high, this low. Those are the price areas. If you want to be precise, you can change them. So this is how you do the head and shoulder, regular head and shoulder formation, right? So while this is taking place, now I have, we managed to draw the left shoulder, the head, right shoulder, the neckline. Then what happens to the volume? Volumes normally increases, but it's not always, right? But it will be ideal when the volumes increase at this rally, the left shoulder rally. Obviously, it falls because it's going through a consolidation. The volumes fall, and also it comes. It is in a pullback. Therefore, there can be the volumes can be lower. Most importantly, compared to this rally of the left shoulder, the high where the head is formed, you may witness the volumes to be lower compared to this. Then you will anyway see, of course, at the top, at this top or at this top, there can be selling pressure. The reason is here there is a reversal, meaning there is a pause making a resistance. So in a resistance, you have oversupply. Therefore, the suppliers will be higher than the demand. Therefore, there can be higher volumes by the sellers. Here also the same story. Then it comes down. Then there is a reversal. Once again, another rally. Relative to this and this, there can be lower volumes at this rally. Right? So in other words, what it means is that it is giving us a signal. It gives you a story where that aggressive movement of that rally is coming to an end. Other thing is, just because there is going to be a coming a pause or trend reversal by this pattern, it doesn't mean that everything is over. We are now moving into a bear market. Everything is gone. That is not the idea when we are using these patterns. We are using this pattern to make use of a projection, right? To capture that price range of a target. Okay. Therefore, we do, once the pattern is confirmed, you see a neckline breakout, meaning this is the neckline. When this pullback continues, breaking the support on closing basis, it has to break and close below the support. When that happens, the support becomes a resistance, right? Support turns into a resistance. Then we draw the target. You can use this line or you can use the price range. In my case, I am comfortable with using the price range. So I do it that way by connecting the top of the head and vertically connecting the point of the support line. Then I clone it, take the cloned level to the breakout. This is that projected target. The prices, once broken, at some point of time, not immediately, some point of time, step by step, prices can come down here. What do you mean by step by step? Always remember, when the prices are going up or coming down, it happens step by step, right? So when you draw or when you see a chart with a head and shoulder formation and a price target, always tell yourself that the prices are not going to come down just in one line. It will take time. And at the same time, it can turn before that also. Therefore, you need to have your own target for you to make a return, right? Now, this is how we do. We draw the projection and the pattern. Now, in this case, we are going to do that by using the price action of Aiken Spence during the month of January onwards. You can see that there is a rally. There is a reversal here. Thereafter, there is a rally. Pausing here, then comes down, making a swing high. Comes down, then pauses here, the pullback, makes another swing low and reverses up to this level. Then makes a swing high there. Then it comes down, make a swing low here. And then you can see that there's a swing high here. Then it comes down, completing the head and shoulder formation. Now remember, when I drew that chart, or rather that pattern, you had a similar kind of a height of this last rally. But that is not, that's only a drawing, right? When we are using the prices, we always focus on the rally, the swing high, the pullback, the swing low, then the next rally into a higher high, which is again a swing high, then comes down in a pullback, makes a swing low. When this is moving up, you focus your attention to the next swing high. This time, in this case, it is here. It can be higher, right? But it has to be something that can stand out, even though you can't see a classic head and shoulder formation by using the candlesticks, right? If you go and look at that area by using the line chart, you will see what I'm talking about. Here, then you go there, then here, right? So you have to train your eyes. We'll be using the head and shoulder tool. I'm using this to start, but that does not necessarily mean that you cannot start at this point or this point. But you have to draw the rally. You have to understand where the rally starting, in this case here. So you are taking from here. You click there, drags it up to the swing low, swing high rather. Then the pullback up to this low. Then you go up to this high. Then along with the pullback, you will see the neckline being drawn. I'm going to use this low. Then you have this high, then comes down to join this. Now if we focus our attention to the volumes, you will see the volumes increases in this rally as per the interpretation, as per the definition. Then it comes down with this pullback, the volumes fall here. Then it goes up again, but it is not as high as this, goes up to this level. I mean, at this point, it is there. Then with the pullback and the next rally, then the pullback, you can see the volumes are going down. Thus, it makes sense to draw the pattern there. Now, if you are using the projection target, this is where it all started at the top. I mean, I'm using the top of that. Then I'll be dragging it down vertically to the point of the neckline. Drop it off there. Then I'm going to clone it. Take it to the breakout. Now you have a breakout here. That is, what happens is it comes down, breaking that neckline, but then again closes above the neckline. So we can, if you want, we can keep it like that. In my case, I would prefer to wait for a confirmation, especially on a closing basis. You have this closing basis, you have this, right? So I'll take this first one. Then I'm going to use the horizontal line in the toolkit and drop the horizontal line at the point of the target. So from this level to this level, the prices can come down. Let's go forward and see whether that happened. Right. You can see that the prices came down only up to this level. It didn't come down to that level. That's why I'm saying when you see a projection like this, it is not that it has to come down to that level, right? But there is going to be a area where you might be able to capture part of that fall, right? And you might wonder why, what are we talking about? Because, in other words, what it means is that when the prices are falling only, we have to sell, right? When the prices are falling only. Now, what is the meaning of selling when the prices are falling if I have bought at a higher price, right? You can work it out and see if we do that, whether there is a gain or not. Now, the other thing that we can make use of the head and shoulder, the regular head and shoulders, is to understand that the prices are coming down if we have not decided to buy, right? We can watch. If we spot this head and shoulder formation, when we see the left shoulder, then we see the head, right? Then there's a drop. Then we are waiting for the next rally where the right shoulder swing high is going to happen, right? Then we will understand whether this is a head and shoulder formation that is taking place, right? After that, we will be using this projection, and then we will look at how the prices are respecting this neckline, because initially it was a support. Once the breakout takes place below the support, it becomes the resistance, right? Once it becomes the resistance, then the prices have to break that resistance and cross above that. Then it throws back to confirm the resistance from here. Once the breakout takes place, it becomes once again a support. Here it was a support, but because of these breakouts below the support line, it became a resistance. Then breaks out above, then it once again becomes a support. So automatically this becomes a trend line, which will help us to understand whether the prices are going to respect it as a support and a resistance. Since this is a reversal pattern, once this breakout of the trend line breakout above happens, where it turns out to be a support line, then we can assume at this point that the prices are respecting that support. While the prices are respecting that support, you can see the horizontal or the sideways support price action. Sideways price action is holding this level, right? This is the previous low area. Here, the prices are respecting this trend line as a support, which is the neckline. At the same time, the prices are respecting this level. Thereafter, the prices have started going up. So if you spot this and you focus your attention and understand what is happening, you will be able to make use of that pattern to initiate your entry once everything is settled and the trend resumes, right? Just because it's a reversal pattern does not necessarily mean that the trend which was up is going to just reverse for a long period. It can be a short-lived reversal, right? So that is what is important to bear in mind when you use the head and shoulder reverse regular pattern. Now, drawing the inverted head and shoulders, or otherwise the upside down head and shoulder formation, it's just the opposite of what we were talking about, right? The opposite direction. In the opposite direction, again, you need to have a trend. Inverted head and shoulder formation, you need to pick up the lower high and the lower low trend, not the higher low and a higher high trend. It has to be the lower high, lower low trend. In this instance, we can use the same chart, right? First, we need to spot the shoulder, or rather the left shoulder, right? I'm going to use this swing low. I'm going to make use of this top and drop it down to this swing low, making the left shoulder rallies up and makes a low there, a high there, then makes a swing low here, then there's a swing high here, then there's a swing low again here, and up to this you can see that there is a, sorry, we will have to take this in order to show this pattern, right? From our focus will be on the shoulders, the left shoulder, the right shoulder, and the head. As long as the head is making a lower low by the side of the low and the higher low, that is what is important. And the other important area is the neckline, right? Now, in this instance, there is a continuation of the lower volumes. You can see that there is some increment in selling at these levels. Then thereafter, you can see that the volumes are reducing. Here also the same story, right? When the prices are falling, and then there is a head and shoulder formation, which is called the inverted head and shoulder formation. It's a bullish reversal, right? The prices have to go up. Then we'll take the projection. This is the projection. We are going to clone it. Then we will be dropping it here, right? For the time being, because we saw a breakout now, which is the resistance. There was a breakout to become a support line from a resistance line. But let's go forward and see. First of all, let's draw the horizontal line also like this, and then move forward. Again, you have another breakout here, right? That also can be used for your projection. So you can see finally that level was broken. The head and shoulder, inverted head and shoulder that we saw here, and the projection was achieved here. So we could have made use of this breakout, or once the breakout happens, there is a throwback, and that throwback supported or tested this level. If you had drawn or you kept that head and shoulder pattern, the regular head and shoulder pattern like this here, then this also becomes another support level. Right. And then you will see there is a pre-test happening within this channel, and then there is a breakout. You could have initiated your entry here, right? Earlier on, there this. That's why I said you can, it will be useful if we enter the price levels itself. Then we could have got it accurately. Okay. So basically, this is, I mean, both the two head and shoulder formations could have been made use for our entry initiation. That is how we use the head and shoulders formation. In order to make the most of it, you will have to, keep on practicing. You're training your eyes and understand how those patterns are forming. And at the same time, what I normally do is when we see, let's say in a regular head and shoulder formation, even without looking, I mean, drawing the pattern, we can take the idea, right? The idea is most important idea will be the neckline, right? So you can visually draw your neckline because that is what we are going to use to project, do a projection. So once you have the neckline, you have the head, you can do a projection. You don't need to just, draw the left and the right shoulders. In this case, instance, also the same story. If you spot the 2 points for the neckline and then the head, then you can easily, without even just drawing all this, right? You can use this point and this point and draw the neckline and stretch it up, right? Like that. Thereafter, from here to here, you can draw vertical line. Similarly, this way around also same thing, right? This is your first point and this is the second point. So you draw, no, sorry, this one and this point. And you can do the projection, right? You don't need to worry about drawing the the shoulders, because if you spot those, these are the levels where the head, the shoulders will come, right? So you need to practice the projected area so that you will be able to make use of it more productively. The next thing that I was talking about is the rounding bottom and the cup and handle. What is the rounding bottom? Rounding bottom is also a reversal pattern, right? And you see in many instances, right, the prices makes a rounding shape, right? When you visualize, you can see that it's like a round, something like a saucer, right? Or something like a cup, or the bottom of the cup, right? Here also you have the same thing. Here also you have the same thing. So basically you have 3 rounded bottoms, right? And in order to make use of this pattern, what we do is first we spot the top or the starting point of the rounding bottom pattern. You can make use of this high or this high, right? And you go to this tool where the brush is, click on it, you have the curve. So you use the curve tool to do that. So you start from this top, or rather the candle that is at the top, you start at the bottom of that candle, and then you will be joining all these bottoms, and take it up to this level. Right? The idea is to join bottoms as much as possible. Then it becomes an accurate rounding bottom line. You can make use of this area or even this area, right? Like that. Then you have this top, and also you have a top here. So you join those two levels. That is the neckline, right? The breakout point. Actually speaking, that's the resistance. We make use of that line to do our projections. Normally, when it is like this, the volumes, they diminish. I mean, first what happens is you have an uptrend and there is a rally. Then you have a resistance area here. The volumes come down. Then we are moving into a consolidation. In any consolidation, the volumes reduce, it decreases, right? So you can make use of this in order to do the projection. What we normally do is we either take the steepest or the longest area, the most lowest area of the curve, and draw a horizontal line to connect to the resistance line from here to here. Then we clone it. After the breakout, it can achieve a target area up to this level, right? So there are two ways of doing, I mean, not two, there are several ways of entering into a trade or into a buy by using this formation. First is you need to spot the immediate high after we see a high low formation at the the second half of the curve. Here you see a high low formation. At this point, you have to see whether there is going to be a breakout above the immediate highs over here, right? So the breakout point is going to be here. We can use this level. That's the breakout point, right? There are, you can immediately go in or you can enter once the breakout happens on closing basis. If we just enlarge this, you will see always remember that it will be useful for us to wait for a breakout. Now, there are instances where if you wait for a breakout, you may not be able to buy. As such, you can decide, taking a certain position of your intended volume, intended quantity for the breakout, right? Let's say this is where the breakout is because it broke out and closed, right? So you have put an order and it gets fulfilled there, right? Then there is, in this case, there is a throwback effect. Then again, a breakout, right? At this point, you might be able to buy back again. Otherwise, you leave this alone, right? But you take a position here. Then allow it to go up like this, then come down. Then take another position at this swing low, right? And then wait for the projection to happen. Or otherwise, there's another method where you wait for the neckline breakout to happen, right? So if you take the neckline breakout, you had to wait. You have to just keep stretching this until such time that breakout takes place, right? Even if you had bought here, your target area is this, right? If this is the target area, then you have to wait for several hours. I mean, a stretch of hours, number of days, for you to see a breakout, and this target is achieved, right? So as a result of that, just like in the head and shoulder formation, where it's not coming down or going up in one straight line, right? In the case of this rounding bottom formation also, you have to wait until the setup takes place, right? Now, the reason as to why I personally want, as an investment advisor, I personally want to educate our clients into a system to be used for trading is because, right, when you get yourself educated, you will understand that it is not as easy as people say for the prices to go up or come down. It is not that easy, right? You need to give time for that, for the prices to start forming into an uptrend or a downtrend. Either way, it's not going to happen immediately, right? Therefore, when we are in a system, when we understand these patterns, right, and the mechanism of a pattern, you will understand that it takes time. That will help you to minimize a lot of risk without just jumping into a stock, right? Believing somebody else, believing a story, believing that this is going to go from X to Y, right? We know a method. We know a method as to how this should be done, right? So that is what we can see here. Now, with the same chart, we can use the cup and handle formation, but I'm going to use a different chart now. Because this is an hourly chart, and I saw some of the rounding bottom formation. This, in fact, is something that we used to, I personally was following ambient holdings based on this rounding bottom and the cup and handle formation. That's why I picked this up. So this is how you can see the rounding bottom. Of course, if you had, let's say, missed this area and you have come into this chart, right, at this level or this level, right, you can see the same story here. Rounding bottom, here also rounding bottom, right? So a rounding bottom is something, from this itself, you can see that in many instances, a rounding bottom can happen. Right now, earlier I showed the regular head and shoulder formation and the inverted head and shoulder formation within the same, or within a short period of time. Right. Similarly, you will see many many chart patterns within the same trend. I will show you this present ASI which I am tracking. Right. You will see. I see a lot of things, right? You can see these lines that I have drawn, right? All these lines are subject or are comprises of patterns, right? You have triangles, you have wedges, you have a flag, all that stuff is there, right? So what I'm trying to say is that once you master or get used to looking at patterns, right, you will understand that, those are not happening in isolation, one at a time or so. Anything can happen on several at the same time. The message that we take out of it is that when you see several patterns happening, almost at the same time, that is giving us a clue that the consolidation that is taking place, right, whether it's weak or strong, right, that is very important. That's why we need to understand the guidelines, the rules, the thoughts behind it, and all that stuff. So we are moving on to the cup and handle to show you the cup and handle I'm using. LOLC, right? Similarly, in the cup and handle also, we need to have the prior trend. There's a question somebody asked, I think, what technical things work smart when market is down, right? Now, always we used to say when it is down or when it is up, right? We interpret in such a way that we understand the action behind it, right? When if you are saying it is down, then it is a lower high, a lower low formation. At the same time, the patterns are comprises or broken into two parts: trend continuation pattern and a trend reversal pattern, right? So when you understand the trend continuation patterns and the reversal patterns, you will see, say in a trend continuation, and we are in a lower high, lower low formation, right? There are trend continue. When we say trend continuation means, right, we will be using patterns to understand whether the downward trend is going to continue, right? For that, we use two lines. One is the resistance line and the support line. In a downtrend, support line has to be broken and come down, right? But if the resistance line is broken and the prices start extending up, that means that pattern that we used as a trend continuation pattern has got rejected. Thereby, that downward trend also has reversed into another upward trend, right? So in one straight answer or a very short answer, you don't expect the patterns to be explained to you, or the setups to be explained, right? You need to understand the whole process of it, and that is why it is available in the YouTube and the FB starting from the session 1, right? I know even now there are serious, very enthusiastic, passionate friends of ours who are joining us, right? They have gone through all those 13 sessions, right? And they are using it, they are practicing it because they ask me questions. That's why I know. But it is only the minority. Today we have about 13, maybe because it's a Friday, but there is a following. And out of that, only the minority is interested in doing this, right? We are really we are really interested in helping them to make use of these professional approaches. These are all professional trading and investing approaches, right? Because these are all internationally practiced behavior. The reason as to why people are interested into this is because of the amount of online trading serious account holders, right, have increased. And at the same, because of that, those methodical professional type clients, they want to learn, increase their knowledge and make use of them so that they can confidently either invest or trade, right? So that also takes time to answer. So there is no straightforward thing to tell you that this is the pattern that you have to follow, in a downtrend. You can't you can't describe it like that. Cup and handle is also a reversal pattern, right? You need to have a prior trend. In a cup and handle, you have a rounding bottom and then a handle, right? Rounding bottom is the cup, then the handle. So I'm talking of a rounding bottom. I'm not talking about a rounding top. Therefore, it has to be a reversal from a downtrend to a breakout, which makes an uptrend, right? So similarly, just like the previous what you call the previous pattern that we used, the other stock, right? We first of all figure out the area where we will be able to, we figure out an area where we see a rounding bottom, right? Now, in this instance, I take this as a rounding bottom. Some may not see that. That's okay, right? Some may see it in a different way. But I can see that there is a rounding bottom formation. And at the same time, I take the high, and then I will be joining the next high here, right? From, because I'm using the tops, I can take it like this. Then there is a throwback. It goes up, then comes down. I'm taking this as one system for the cup and handle. At the same time, there's another system where we can take this out and make use of this reversal here, this pullback as a channel. It can be a channel, it can be a triangle like this. Then you have this breakout. Once this breakout happens only, we can make use of the target area and see whether it will, from that breakout point, with how far it can go up to. So this is the level. So exactly from this breakout, it has gone up and tested that level, right? So this is only one way of looking at a cup and handle formation. Once you start practicing, you will see many instances where the cup and handle pattern can be detected, right? So when the cup and handle formation takes place, another reason why I took is because of the volume. At the start of the bottom or the rounding bottom, you see the volumes to change hands much in larger volumes in comparison to the lower trough that we see in the rounding price action. Here you can see that. Thereafter it increases. You can make use of the curve also to see that something like that is happening. That's why I made use of this. So it's very important. In my case, I always, not only me, if we know the importance of the volume behavior, then we always, when we see patterns, we make use of the volumes. So that is the main reason for me to make use of this, so that rather to show you the cup and handle formation. Fixing a support and resistance are a nightmare. Could you help us to do it correctly? I also one who watched all 13 sessions but need to watch it. Many thanks. Right, Tushara, if you're around, you just communicate with us, so that what we do is we give personal attention to our participants, right? And it has worked for everybody who has made contacts with us and ask those whatever questions they have to iron out. Some they used to share their charts and want us to comment on it, and then they manage to kind of increase their confidence by drawing their own charts, developing their own charts, and then using them for their trading and investing activities. So if you can communicate, we'll be more than happy to help you. After following the inverted HNS, I am seeing a similar pattern expo on hourly charts. Any thoughts? Yeah. might be available on the hourly chart. Now that's the beauty of understanding these formations, right? So you see this low, which comprises of a shoulder, the neckline, or rather the neck, head. You have the neck, so you can join that without drawing the entire chart pattern. This is what you can make use of. End of the day, that is the reality. From here to here, there is a range. You connect from the tip of the swing low vertically to the top of the neckline, and then clone it. At the moment, there is no breakout, but we let's say it is breaking out here. This is the area it can go up to. That's something like 208 rupees, right? At one point, we will be using Fibonacci extensions, Fibonacci retracements to understand how it can go up. Without the Fibonacci extensions, we need to bear in mind that for the price to go up to this 208 or 210 level, let's say 208, needs to surpass all these levels, right? At all these price points, you have a lot of volume that has changed hands, right? So when there is volume that has got absorbed above the present price, that is considered resistance. People have bought that amount of shares at higher prices. Therefore, when the prices are going up, the demand is going to meet with that supply. If the demand is going to be higher than that supply, eventually, step by step, it's going to go up to 208 rupees. Just because you draw these projections doesn't mean that it's going to go up to that level without breaking the resistance points, without absorbing those volumes. So that we have to bear in mind. So what you see is correct. That's a good, what do you call? Yeah, so that's a good identification. That's the way to go. Right, so basically that is what I want to cover today, head and shoulder pattern, then the inverted head and shoulder pattern, the rounding bottom, and the cup and handle. So Harin has shared my email address. Anybody who is interested can drop a mail or contact me. We will be, not only me, we can as a team will be able to help you to become a professional, to introduce or to follow the international best practices when we are investing and trading. So if you don't have any further questions, let's see. Right. So if we don't have any further questions, we can wind it up. Fine. Okay. So Harin,